Welcome to Mortgage Monday. I'm Matthew Poole. So in last week's video I showed you which credit reference agent to use and how to download your report, how to sign up. What I'm going to show you today is my top 8 tips on areas of credit that can affect you massively. Now it's 8 really simple things. Watch to the end so you know all 8 on which to look at. Make sure you're not falling short on any of these, and meaning you can't get credit going forward for your home improvements. Thank you for joining me again on Mortgage Monday. So what we're going to look at today again is the 8 top key points on what can affect your credit and stop you from getting credit going forward. Now on your dashboard that you downloaded last week, you'll have a traffic light system. So these 8 factors will all be on your home screen. They run from green to red. So green, great, keep doing what you're doing in that area. Amber, you can do a little bit better. Red, that really needs looking at. So let's look at the 8 in a bit more detail. So number 1, court data. Court data is basically a CCJ. So if you've got into bad debt in the past, and this is where the person you took the credit from will ask the court for their money back. A CCJ goes on your file and it can be on there for 6 years. The longer you have that, the better it looks for lenders, but if you've got a CCJ, chances of getting credit can be quite slim, unfortunately. Number 2, missed payments. Missed payments on any credit, whether it's a loan, credit card, mobile phone contract, going over your overdraft limit, missed payments to a lender show that you can't be trusted with credit. Lenders will pass their information on to Experian, so it will be registered on here, and again it can show for 6 years. Really simple tips on this one. If you've got a credit commitment, have a direct debit set up for it. Really easy, it goes out the bank automatically, you know it's paid. Number 3, debt to income ratio. This is the amount of outstanding credit you have overall compared to your annual income. So if you've got £100,000 worth of annual income and £50,000 worth of unsecured debt outstanding, you have a 50% debt to income ratio. Now the lower this is, the better, because it shows to lenders you're not utilising all that credit that you are. Number 4, credit utilisation. Again, this is how much you're using compared to your overall limits, and it relates mainly to credit cards and mail orders such as Next, Very, Littlewoods, etc. So what you want to look at on your credit utilisation is making sure and trying to use around about 30% of your overall limits. 30% shows to lenders you're very good with credit, you're not over reliant on it as well, and it shows that you're not taking more than you need. Number 5, credit applications. So this section here is thinking about how you apply for credit and how often you apply for credit. A number of credit applications in a short space of time can have a detrimental effect on your credit, because it can show to lenders that you are desperate for credit if you keep getting knocked back. So try and keep your applications to a minimum where you can. Number 6, account stability. Lenders like to see credit stability and also that you can maintain good relationships with credit people. So the longer you have credit accounts open, the better it looks on your file. Now with this as well, if you've got old dormant accounts that aren't being used, it can be worth actually leaving them open to show that longer term relationship with the lender. And again, from a lender's point of view, it shows that stability there you're looking for. Number 7, residential status. So what you're showing on here is really simple again. It's just making sure your information's up to date. If you've moved address, make sure all your open and active accounts have got the right address on it. Different addresses with different credit accounts showing can show that you've got credit everywhere. Lenders won't know how to use that information, and it can put you in jeopardy of being accepted again going forward. And again, ultimately it can lead to inaccurate information as well. Again, a key point on this part is to get yourself registered on the electoral roll if you're not already. The electoral roll is again a really simple thing to do. You can go on the government website, register to vote, and again from a lender's point of view, it's just another identity check to make sure that you are who you say you are, and it's another check they can do to confirm your identity. Number 8, employment status. So this is all about your income that's coming in. If a lender can see you've got a consistent flow of income coming in and it's regular, again they have a good understanding of how your credit history is looking, how you've maintained it, and how likely you are to be able to afford it going forward. So that's just 8 quick tips on how to make sure your credit's in order. Again, they're really simple, things that you don't need to fall foul of. Make sure you keep on top of your credit, all your information's up to date. If you'd like a guide on how to go through this and what sort of things to look for, comment below and I'll send you the guide. Follow me on LinkedIn, subscribe on YouTube. and I look forward to seeing you next week on Mortgage Monday.